Welcome to the Bohannan Team Podcast, episode 5, where we talk about all things real estate. I am Megan Bohannan.
And I'm Emily Unnerstall.
I'm Rosio Roe.
And I'm Elizabeth Zazueta.
AKA
Sally Navy.
Thank you. We're really going to get that down. Okay, selfishly, I want to start today off. I didn't want to tell you guys, but I've had this listing, as you know, they don't know, since July of last year. It closed today, 55th. Oh my gosh. So I want to give you guys a little backstory because this makes me, this is why agents should get paid full commission, which I had to negotiate the entire time. This was listed previously with another agent for $650, which I don't even know if they ran comps or they just listened to the sellers. Like, that's what you want. That's what I'll sell it for. Nothing ever came of it. They, so it became a disaster, sat on the market for a while, and then he's pissed off and he calls me and I'm like, well, you know, I don't want to hurt your feelings, but here's what your home is worth. He still wants to list a little bit high. And I thought, well, let's see what he wants to do. You never know. Mm-hmm. Well, we brought in so many offers that were lowball, and he would not even consider them. Finally get an offer in how many months later? 7 months later. And it took forever to get it closed. So I'm finally like excited. They're doing this. We negotiated. The trust is incorrect. We have to find this long lost brother that they haven't talked to in 10 years in hopes that he'll sign this document saying he forfeits any of the proceeds of the home. What is the chances that that will happen?
Wow.
We got that to happen. I'm so excited.
I remember you telling me, I was on the phone with you. You were like, I have to find this long lost relative.
I did. And then I find him, which is fantastic. And he said, I'll sign it. And I'm like, I can't believe this.
That's
man is the nicest guy ever. He's not about the money. He was more about like the legacy of the people. And I thought this couldn't be a better situation. Yeah. And then my seller's like, well, I don't know what my payoff is. I said, well, sir, you've been telling me what you owe in this house the entire time. And he's like, yeah, that's what I thought I owed. And I'm like,
so he never really checked. He just said, oh, I owe this.
It was a lot. This is like from start to finish, the most.
Good thing escrow pulls all that information for you, sir.
it was a lot. So anyways, his payoff was off by $30,000, negotiated all that. And finally today we closed. But I feel like I closed 18 homes with this one escrow, but I couldn't be more excited. But it taught me to really check boxes that you don't think are even possible boxes, because who would have thought this was the incorrect trust because a trust had the same name. Don't trust your client to say they know what they owe on their house, even though they said they know. And so there's a lot of things.
Make sure to get a bank statement from them. That's usually what I'll try to ask them. I'll say, send me your most current mortgage statement. That way.
He was in a reverse mortgage. So that means that they don't know because it's in a trust. Different. But oh my gosh, you guys, I feel like I deserve a
Do you feel like
we got to go out
badge of honor? Oh, I like today. I'm on a high.
You're on fire. Bring the champagne, Lindsay.
I need the champagne.
And lift it off your shoulders.
Yeah.
I don't know. Did you just, I feel like I should go run 10 miles or something.
I'm going to be so sad. I'm not going to see your sign every morning anymore.
It ripped off in the wind.
Yeah.
But you won't see my post, but that thing ripped off in this storm of a weather thing, climate change we have going on. But anyways, I couldn't be more excited. So I wanted to make that all about me for a second.
We're all excited for
That's
you.
amazing.
That's
Yes.
super exciting.
But it also shows, because I was thinking about it, like what were things during this transaction that we could have changed? Greedy sellers need to know that sometimes going with an investor on homes, that this house, as you guys know from photos and everybody who might not, had carpet in the kitchen, cabinets from the 18th century, dry rot. During the inspection, they found mold and asbestos, like every single thing that is deplorable about a home. Yeah. And they wanted to not go with an investor. And I thought that probably was your best case scenario, because by the time a loan came in, we had to give credit after credit after credit. Yeah. So sometimes it's better to just take that cash offer.
What was the sale price after?
We got $469, which is really high for that house. Mm-hmm. But then we had to give $10,000 in closing costs, and then we had to give it $8,000 credit. And to get it back down to make him happy was another $3,000 credit. So it came back down. I was like, you should have just gone with that 450 cash offer that could have closed in 10 days.
Wow.
Yeah.
But people are greedy and they push and push and push.
But why didn't he want to go with an investor?
Because they feel like somebody's winning on their behalf. So there's this whole mindset of like, well, I could have gone in there and done the floors and I could do that. And I'm like,
But you
then
did
do it. Yeah,
Yeah.
exactly.
Why didn't you?
Exactly. So it's kind of one of those things, lesson learned. How do we approach people? And really a lot of real estate is mindset. So we have to like learn how to talk to clients. Sometimes we don't have that luxury because they don't want to listen to us. They think they know everything. They think they know their payoffs. They think all this stuff. But at the end of this, the seller and I, we have laughed and we're like, we did it. Like, this is like, we're here.
We're done.
And so it's been a good experience. And now I'm friends with this long lost relative who owns multiple homes.
Does he live in
Yeah.
California?
He does.
Yay!
Yeah. He's really, really nice man. And I'm so grateful. So
That's amazing that he was like, yeah, I'll sign it. No worries. Because I've had
yeah.
situations where, it's an estranged wife or husband and they don't tell you that, they're needing to sign off until we're about to close. And then if they don't sign, you can't close. And now you wasted all this time.
that's
Yeah.
more for divorce situations.
Yeah.
So a lot of times, and I learned that early on, now people are like, well, I'm legally separated. And I'm like, prove it before I continue to help you, because we can
Okay.
get down to the nitty gritty and she's not going to be willing to sign like an interspousal agreement, or if it's not court ordered, things of those that matter. So you want to make sure they are legally divorced, because
Divorce decree.
some people think they're divorced and they're not. So you hear of these like stories, like, and sometimes it's like romance stories, like, we realized we weren't legally divorced and we ended up getting back together.
Oh,
That's great. Not in real estate. We don't care.
I thought like they try to go marry someone else and they're like, sorry, boo, you are
That
still married.
happens too. I think I'm reading too many romance novels, but yeah, a lot of times it's not a good situation. But in real estate, we want to know these finite answers, especially about trust, things like that. But anyways, today, our topic, huge and very, very important, because we've talked about getting offers accepted and what do we do in the situation of buying and inspections and all of that. But nothing happens unless we have a great loan in place. And, Rosio, you touched on the fact that they need to be pre-qualified before they look at homes. Yes, absolutely. So we want to get them with the right lender and go over some loan programs. So we talk to a couple lenders and we ask them, what are your favorite programs and what are people looking for right now, because rates are really high.
I'm so sorry. I don't want to interrupt, but I think maybe before we talk about that, can we talk about why is it so important that these buyers are pre-approved before looking at houses?
Oh, absolutely. And that's the thing, is like what we're for going to talk about these loan programs is we want to know what their affordability is because of rates. So they need to talk to a lender, especially right now. Back in the day, we kind of knew like, okay, this is what, like we knew a little bit more. With rates now and people's credit and all that stuff, you have to talk to a lender. It is the most vital part of buying a home. Because if we get to a home, you fall in love with it and I'm showing it to you, you're like, let's go back and write an offer. My kids are going to love the pool. And then you realize you're not qualified for that amount. It's very, very upsetting.
Yeah.
Or you can qualify for it and then you find out what the payment is and you're even more disturbed. You're like, I can't.
Yeah.
And the problem is that after you see that home, every other home is going to be like, it's not even going to compare.
Yeah.
So it's going to be harder.
second
Oh,
rate.
yes.
But most buyers want to go look at houses before they even speak to a lender.
Yes.
And
They do.
In today's market, I've seen that a lot more than in the COVID market.
okay.
Well, you guys mentioned last time you did an open house at Mobile Home and everybody came in, they were bragging about how they're already ready and qualified. And I think it's because people are understanding now, I really need to know what my payment is with these rates. When
Yeah.
rates are low, there's a little bit more like confidence because you
I
know you
think
could
so.
probably afford it. Right now, I want to make you comfortable with where you're at. And just because you qualify for 600,000, that doesn't mean we need to look at homes at your max rate. I want you to feel comfortable with your payment because payment's everything.
Yeah.
Price of the home to me doesn't matter as much as the payment. So we want to get them in front of a lender to understand this. And the lender's going to preach that as well. And also as a listing agent, especially with our new gorgeous listing we have, I'm not letting people come in and see that unless they have a pre-qualification form. My seller still lives there. It is, it's fully furnished. We're not just going to let strangers come into this home and look at it. Looky-loos and waste my seller's time because I'm saying, hey, can you take the dog for a walk? Can you take them out? Like we are putting people out for these showings to find out. You're like, well, I just wanted to see what a pool home looks like.
Yeah.
That's not what we're doing.
I feel like asking for a pre-approval at showing is like a lost art now. I don't see a lot of people doing that anymore. And
But the
it's
problem
sad.
is usually the home they really want to see might require it. There's
Mhm.
big hitting listing agents out here. I see their name on the MLS. I go, crap, Mike's definitely going to want a pre-qual or he's not going to even let me see it. Some people go crazy enough for proof of funds. Pre-quals will usually do because they know the lender has that information.
Yeah.
But a lot of these, top listing agents own the majority of the market. So I would hate to not show you your dream home. And because you're not pre-qualified yet, by the time we get you that pre-qualification, there could be multiple offers on that home and you missed your opportunity.
Yeah.
So doing our homework in advance and finding out all this information is vital. Yeah. So that's a really great point because I think people don't understand like, well, why?
What's
like,
the point of
I really
having a
want to know if
pre-approval?
I like that house before I give somebody and have them run my credit.
And then they say, "Oh, I only want a payment of $1,005," but you're looking at a home with a mortgage of $3,000. You're obviously not going to be able to afford that.
The reality check, exactly. So there's different things that lenders are going to look at, and we'll go through that today to kind of get people, because really, if you do know what your finances are and what your payments are outside of what your mortgage is going to be, you can kind of figure out maybe this is what I qualify for, this is what I can afford, type thing. But you still have to talk to a lender. Because you'd be surprised what they're looking for to get you that pre-approval. So when we talk to, I don't know, how do you guys want to go about this? Should we go about what are the best loans right now, or
What's the favorite loan right now?
I think, well, that was what's interesting. I think it really depends right now, and we're seeing a shift in California as we went to this EDGE conference, and we're building up these podcasts is because we're seeing this market shift and we're trying to stay on top of it. The loans that are popular right now are kind of the lower priced homes or mobile homes, because we're seeing that people are wanting to pay cash for things or cash out of their homes and go do something like that. But as for the loans, I think that they were saying USDA are becoming really popular and down payment assistance.
Yes. And so for touching on that a little, so FHA, remember, is one of the loans where you can have the lowest credit score. But the thing is that if you have too low of a credit score, you won't be able to qualify for the down payment assistance. So there are two different programs. FHA, you can have 590 or higher. And then if you want to do down payment assistant, now you're looking at you have to have a credit score of around 640.
Okay.
So, and if you don't have that 640, you don't qualify for that down payment.
So let's talk about that. So FHA is first time home buyers, right? So we hear of these things. There's conventional, that means you're putting more money down. VA, if you hear that, that is for our military, which I love those. Those are great. We love to help our military buy homes. There's a lot of benefits to those as well. But the most, since in my career, I've done FHA. Even for people, I think, because you get your eligibility back if you sell your home and you don't own a home at that time, you can use FHA again.
As long as you have been off title for 3 years.
3 years.
Yeah. So it's not a one-time ticket. So people think that.
Can you also refinance to a conventional and then use FHA again?
Yes, as long as it's been 3 years.
3 years.
Yeah. I think that that's actually an interesting fact. I would like to ask a lender that, like, if there's different, because sometimes I talk to lenders, they go, oh, no, we can do that. And I'm like, but why? Like all these people have different rules. So never count it out. I think that people, I think you mentioned this once, Elizabeth, is people are like, oh, I have to have 20%. No, you don't. Actually, how much do you have to have for a USDA, Rosio?
Zero down.
Zero down. Like, there are loans out there. So we're going to go through that. But I think let's talk about what are the important things of knowing that you will be qualified. Like you said, you need to have a 580 credit score at a minimum to do the FHA, but that means you have money in the bank. But most people who have really low credit don't usually have reserves in the bank.
And reserves meaning how much money you have to last you 3 months. So it covers your mortgage, your bills, whatever you need to live for those 3 months.
Yeah. And a lot of lenders now, and this is one of the points that they brought up, was they want 3 to 6 months reserve in your bank. But I do know that you just have to have skin in the game and have some type of savings for the down payment assistance program. Because I did have a client recently and they just wanted to show that she had $10,000 in the bank, but that's pretty much what your closing costs are going to be anyway. So
Yeah.
you should have that at a minimum.
Yes,
Yeah.
because even a USDA loan, even though it's 0% down, you still have to come out of pocket closing costs.
Mhm.
And unless you have it in the bank, obviously we can try and ask for seller credits, but it's better for you to have it just in case you find your dream home and that seller's like, no, I'm not giving any credit.
Mhm. Well, that's what's neat. And we could just say about the USDA real fast was, yes, you can do 0 down and you have to have your, because I was wondering, I think it's at least 3 at a minimum for USDA closing costs.
Mhm.
But people were like, okay, Elizabeth, you're buying this house. It's $450, 0 down. You need to have that 3% closing costs. You're like, okay, so I need to save, what is that, like $13,000, $14,000? We can ask the seller for that. So you really can genuinely come in with $0 down. So when you hear that you have to have closing costs, we want to know you have that, but we want to save your money. So essentially, you have $14,000 still in your bank when you walked in this home to maybe fix things up, paint, or have that security of a few months payments in your bank. So we don't have to, you don't have to have the closing costs. Essentially, you have to give them away. We're going to try to fight to get you that,
Mhm.
correct?
The best deal possible.
Yeah. But USDA are getting a little bit more competitive. Have you noticed, Rosio, when you're
Yes.
showing? Mhm. Yeah. So I don't do them as often, actually. But I noticed that there's a few agents in town. That's where their sole focus is for that. But
And just to touch on USDA is they're located out of the city.
they're
So,
unincorporated areas.
Exactly.
And I made some notes about that, and I'm trying to read my own writing.
Like LA.
like LA, Little Rock, Mojave, Cal City would
Yep.
be one.
A little bit more
Rosemead.
rural, too,
Antelope
right?
Acres, I
Correct.
think, qualifies for part of that. And you can always ask your lender before you look at a house and say, hey, does this qualify for USDA before you
Well,
go
that's what
into it?
they were saying. And she was saying, I can actually tell you what homes are eligible prior to, because again, we don't want somebody to get to a house, fall in love with it. And we go,
Mhm.
we're so sorry. We showed you something. It doesn't qualify. Because they're kind of annoyed at their agent. Like,
Yeah.
why are you showing me this house when
Yeah.
you know I'm doing this program? So we'll do our homework up front. But debt to credit ratio, what are some of the things, Elizabeth, that you know that are people's payments that can affect?
So debt to income ratios, right?
Yeah.
That's a very common thing lenders talk about. So basically they want to see that you don't owe more than what
You make.
you make,
Yeah.
and that you're going to comfortably be able to afford that mortgage and your other bills. So for most of these programs, I think the DTI is like 48, 50%. I'm not sure exactly.
They did range. So that's actually a good point. So depending on the program, and this was the interesting fact. She said, and I didn't realize this, you can actually have more debts if you have better credit. So when you have a lower credit score and you have a higher debt, they're just not trusting you at this point because you
Yes.
are now a liability. And we don't want to put you in a situation you can't afford this home either, right? We're not trying to sabotage your life. But that is a good point. So some of the things that can affect your debts would be a car payment.
Card payments.
They look in about insurances that you owe. These are things that you have to pay. And one that is a big one is student loans. So people have to pay on those. And usually to afford a home and you have a good job, a lot of people have student loan debt.
So with the student loan debts, from what I've seen, they don't count the full. So say you're not paying payments, right?
Mhm.
So most student loans, they probably don't have any payments, but they will count a certain percent of what your debt is and make it like if you're paying a payment.
Yeah, it's
Right.
not the most harsh debt, but they are going to look at that.
Yes,
These are what you are
exactly.
liable for. Car is a big thing because we just recently talked to a lady, as you guys know, and she qualifies financially, but her car payment was over $700. And they're like, ma'am, that's, a
Yeah.
good quarter of what you make a month. So that did affect her. So they're trying to re-amortize her loan to pay off that car.
And I think they're not really looking at how much you owe, but how much that payment, that
Yeah.
monthly payment for that specific debt is.
And how much longer you have left
Yeah.
on the loan, the life of
Exactly.
the loan.
So if
I
you
hate
have
debt. I don't want any debt in my
Yeah.
life.
No
So
one-
for
no,
me,
yeah.
I'm like super weird about it just because it's really scary. And as a realtor, we're not guaranteed income. So for me, I'm like, I always want to keep my ratio as low as possible. But we know that life, you have to have a car, you have to have all those things. So if you're saying I really need a new car, but I want to buy a new house, you can do that. Just
Right
wait till we
after.
close. You can literally buy it the day after we close. Some of the things we've don't buy appliances, don't run your credit while you're getting a loan. All of these things are
Yeah,
really
don't
vital.
finance your new furniture.
Yeah, we remind those. I think we remind people about 25 times because you're getting excited and you forget and you're at Ashley's and all of a sudden you're like, I just ran my credit. So if you definitely don't want to be doing those things. But for the down payment assistance, because I think we need to talk about how that is probably our best
The most
loan right
common,
now.
yeah.
And why not take advantage of it? If the government's doing these loans, I feel like it's a great thing for buyers out there.
But I do hear that they offer higher interest rates. So it kind of all depends on the specific buyer because some people already have the 3, 5, 10, 20% down. So they don't want to use that loan because they rather have a lower interest rate.
Yeah.
So it all depends on the buyer.
Yes, I 100%. I think the problem is, and it's like the people, they don't have the good credit and they don't have the money. And that's the reality. People are so desperate to get into homes. And I think you're right. That is the worst interest rates. It's not the best thing. Your payment's going to be higher. There's penalties, later down the road sometimes of, if you sell your home, but there's no penalty higher than renting.
Yes, I was going to say, but it's better than renting.
It is better than renting. So we just want to always remind the buyer of that. I went to an appointment yesterday. They're trying to buy the home that they've lived in for 11 years, which is really exciting.
Yes.
But the seller doesn't want to help really do anything to the house. These people have lived there so long, they actually replaced the wood floors because the flooring needed to be replaced and the seller didn't, or the homeowner did not want to do it, which I thought, well, that's really kind of you because this is not your home.
Right.
But now they essentially are trying to buy it. Well, now they're realizing the homeowner wants way too much for that house and they're not going to fix the things that if you naturally were to buy a home. So I told them, I said, if you move out and you come back as a buyer, we're going to get a better deal for you, essentially. So we need to consider those things. So again, greed can stand in the way of many sellers. So they're like, what if we just go start looking at other homes? And I thought, you know what? I think that might be your best option. But again, you have to understand there's so many things we could talk about, but these people started off paying $1,350 a month. Wow, that's great, right? And I'm not even kidding you. For a home that's 1,500 square feet that needs everything, they're paying $3,000 a month for rent now, which is illegal because that seller has increased. There's no way that you should be at $3,000 now. So when they told me that, I said, technically your seller is doing something that is totally against, the rights of a renter.
The tenant right.
But again, these people don't know what they don't know. Just like, why do you get pre-qualified first? Because you need to be educated and know these things. We want you to understand and not be misguided.
Be in the best position possible.
Oh my, it makes me sad. I sat there yesterday. I was like, so he's like, yeah, I've been paying $3,000 since July of last year. And I thought,
and they've only been there 11 years.
Only? That's a really long time. Oh, but you're saying for the increases.
Yeah, for the increase.
Yeah, not okay.
Crazy.
Yeah, it made me really sad. But I also said, you're about to give this man $36,000 this year. That's more than the down payment assistance. We actually have you into a standard FHA, less penalty, lower rate loan. So they were able to get qualified with Gabby Godey, which is amazing.
Nice.
So glad about that. And I think we're going to go look at homes and, this seller might be, was it cutting your nose off to spite your face?
Yeah.
I don't know what that means though.
What that means is,
You cut your face off?
no, you cut your nose off to spite your face. It's really hard to explain, but
Because it doesn't really make sense.
It doesn't really make sense, but it's
So
like
you're cutting your nose off to make yourself look better, but in reality you look worse.
No,
That sounds good to me.
You're mad at your face, so you cut your nose off.
No, I love
Kind of
my
a thing.
nose.
I know.
It's like, I have a
It's a
great,
hard
my
analogy.
side profile is fantastic.
I know. I use that analogy all the time, and it makes sense when you use it, but it really doesn't.
It only makes sense because people have heard it.
Yeah.
Yeah, but we have no
Yeah.
idea. We're gonna Google that later.
So that seller
Let's just ask
is
Siri.
cutting
Yeah.
his nose off to spite his face, meaning he's willing to let go of a good tenant and somebody who's been really good to him for a really long time because he has the greed of money standing behind him.
Absolutely.
That's what that analogy would mean when you use it in this
Yeah.
context.
And that's just one thing I'm going to throw out. I know we're talking about buyers, but sellers, this is not the time to be greedy. I have, we had that one and we did the open house in East Palm to that beautiful 2-story. The sellers did everything that your dream clients would be. You're talking about the commission. They go, well, you work hard, honey. that's what you just like. You're like, what? And they go, what do you think of the price? I go, well, you're the professional. We trust you. What would you do in this situation? I'm like, well, the holidays are approaching and this, they listened to us. We listed it and we got $10,000 over in a market
And how
that
soon did you
everybody
sell
was
it?
giving closing costs away to.
And how soon was it?
That week we just did the
Compared
open house.
to your other listing that you said was since last July?
But that would, oh my God, I have sold 20 plus homes since, well, more than that. I don't even know.
More than that.
Yeah, it feels like 200 from when I listed that person's home.
Yeah.
Granted, it is a specialty niche sell. And I know when, people pass away and that's your inheritance, you want to get as much as possible.
But you're
You can't
being
get blood
so
out of a turnip.
greedy.
No,
That
that's
is-
another
wait,
analogy.
We're going to Google that one too. I'm like 100-year-old
so
lady
a turnip
today.
is white. If
Okay,
you were to
you're done
squeeze a
talking.
beet, you could technically get blood out of it, but not a turnip.
Oh, that makes sense.
Is it blood though?
No, but just
but
saying
it's
the
red
color.
like blood.
You can't get juice out of a turnip. Maybe you can. A blood. Okay. I don't know.
You can get juice. It's just not going to be red like blood.
That makes sense.
Yeah, so I think this is just don't be greedy. But that also segues right into we're trying to get these buyers closing costs. I represent as many buyers as I do sellers, and you girls help a lot of buyers. We want to get them closing costs. We want to give them the best deal, but we want to make the seller happy too, right?
What is the one of the things that your sellers tell you whenever you go back and say, hey, this buyer is giving us a strong offer, but they want closing costs? What do they sellers usually say? No, I don't want to.
How? Well, I try to tell people up front, here's what to expect when I put your home on the market. These are the offers we might get. Don't be insulted. They might ask for the refrigerator and washer and dryer. Those aren't included. They might ask for repairs. They could ask for these things, but if we price it appropriately and they ask for some stuff, we can say, we're selling it as is. We're not doing a dang thing to this house. So there's different variables, but I usually set that tone up front because one of my clients, the carpet's kind of not the greatest, but why move out to replace carpet that somebody's probably going to rip out and redo when your house already has other aspects that are great? So I said, just be prepared. Somebody could ask for a carpet credit. So when we do get an offer and says carpet credit, they're not like, they asked me for a carpet credit? That
Yeah.
is so rude.
So you're setting expectations from the get-go.
Expectations, but we also know that not all listing agents communicate with their clients and set those expectations. So when we're writing offers for our buyers, we don't know the conversations held on the other side. So that's why it's always vital to try to pitch it in the best light. But I try to always advise my sellers, like, this is probably what's going to happen. And then when we sit there and we say, hey, Rosio sent an offer for $500,000. She's asking for $10,000 in closing costs. I will have a conversation with Rosio and say, hey, my clients don't really want to do anything. I'll just be honest with you, but they understand the market. But if we give you these closing costs, we're not doing anything to this home other than governmental repairs, which would be like your smoke detector, health and safety. Exactly.
Would you hold that same standard on a cash buyer?
That's a good question because people think, oh, cash, they're not going to ask for anything. No, cash people still get to do home inspections. They can actually still go get an appraisal to make sure that they are paying the appropriate amount for that house. But I think it all comes into conversations. But I've had many, many times an agent where, Rosio could write this offer and say, we're not going to ask for a dang thing. They're the easiest going buyer.
And then
Day
it flips.
2. You're like,
But
okay, Rosio doesn't answer her phone anymore. These people aren't, it would become like, I don't want to use you as an
FYI,
example.
Rosio always answers her phone.
She does not ever miss a call, this girl.
I was going to say, but that also happens with our buyers because sometimes they're really excited. They want to get that offer accepted. And they're like, oh, I don't mind that crack. I don't mind this. I don't mind that. And then
Reality hits when they're like,
They find out that crack is because the foundation's uneven.
or they don't care and they brought their dad to the home inspection who gives them like, and I've actually had cancellations. Kaleshi canceled once because of that. The buyer was fully in and his mom comes around the corner and she's like, did you see those people leave their trash cans out all the time and did you this? And
It's
like,
a neighborhood.
well, there's just the fear of God that people, it's this negative Nancy's doing things, but it's funny because that guy didn't buy and guess what happened?
So for hire, no?
Well, he actually was going to get a better deal because rates also went up. So he canceled and now he was not locked in anymore. He's going to have to go pay those higher rates. So sometimes I'm like, don't cut your nose off to spite your face.
And that's
sir.
exactly what that means.
But we don't know.
you got it right.
Dylan, if
She
you're
knows how to
listening, can you
use it.
Google that and text
I
me?
know. Right? Who has their phone out? Text Dylan.
Yeah.
He'll get us the answer.
Oh, that's really funny. But yeah, so those are the things to consider. What was your question again? Or what were we talking about?
I forgot.
I don't either. But yeah, so writing an asking for the costs. Like, how do we pitch
Oh.
that to the seller? Yeah, you want to have a good listing agent on the other side if you're representing the buyer. And if you're a listing agent, you need to talk to your seller and advise them on the market they are in, especially if they have their COVID blinders on, and people are, but Betty up the street, September of 2021 got 60,000 over. Well,
People still bring that up.
oh my gosh.
Yeah.
I just like, I have very unrealistic clients sometimes, but it's not their fault if they don't understand. I love you guys.
Oh, mom.
Oh, mom.
Elizabeth's mom's calling. Yeah.
Whose mom is it?
My mom.
Oh,
Yeah.
that's sweet.
So yeah, you have to set the tone up front in hopes that we can have good conversations with everybody. But let's go through the down payment assistance program loan so we could tell everybody what to expect. But we have on here.
So this one is not out yet. It's going to be
No,
coming
we're
out.
not going to.
Also, let's keep in mind,
We could talk about it,
let
but I
our
hate it.
listeners know that we're not lenders. We are not
Right.
experts in the subject.
Full
You should
disclosure.
consult a lender for more specific details, but we can give you like a general
Yeah.
idea.
I think they'll know as I like second guess myself this entire time as I explain this that you should talk to a lender, not me, because it's so complicated. And which is good too to point out, we don't go into your personal items like a lender will.
Mhm.
Sometimes people and family and friends don't want to work with somebody they know because they feel embarrassed maybe about their
Yeah.
finances. We do not look. I am not
Mhm.
looking at your credit report. I am not looking at your income. I give it all to the lender for them to know what you're
Mhm.
qualified for. I'm not being invasive and I respect your privacy. I know you
Yeah.
girls are like that as
The
well.
only
Yes.
thing that we want to see is the first page of your bank statement showing how much money you have in your account. Black out your home address, black out your account number.
The proof of
and that's
funds.
our
So
proof of
saying that
funds.
you
that's all we want to see.
We just need to know that you're proving that you have the amount that we need to come down with. If you have multiple accounts, it's not necessary. You can also keep that private. We
Yeah.
don't need that. The lender might want to know that, but we don't need to know those things.
Especially because once you're ready to put the offer, we need to attach your proof of funds
Mhm.
with your offer
Yes.
and
Mhm.
pre-approval.
Yes. And that is a requirement. So people are like, I don't want them to know. It's like,
They
well,
have to.
They
we
need
can't.
to know if you have the money for it.
If you want them
Absolutely.
to accept your offer, because they need to know that they're going to feel secured as well. Like, okay, the money is in the bank. We don't have to
Mhm.
wait for so
Yeah.
and so to let you
People
borrow
aren't just
it.
going to take our words off things. I've worked with many agents before. We've had great deals. Maybe they're not going to hound me for certain things, but a good agent, even if you worked with me 25 times, don't trust that I did see it. Like we
Mhm.
should make sure that these people do have what they're promising. But for the CalHalf loan, Rosio was mentioning another loan. We can mention that kind of in a little bit, but I don't love that loan yet. There are going to be loans that come out that doesn't mean that they're good. They're trying to get people who maybe
are desperate.
desperate to buy, and there's high penalties attached. I care so much about my clients. That will always be my last resort. The only way I'll ever have you do a loan like that is because you've been renting for 14 years and this is your only option to have an asset.
Mhm.
Then we'll visit those. But for the CalHalf loan, which is great, like she was saying, there's no penalty. Like where you're down the road, you have to give back like 30% of your equity to somebody else. Like this is yours. You are paying into it. The penalties are the fees and the interest rates, right?
Mhm.
But your minimum credit score for that is 640. So do you guys notice 640 is hard for clients, or do you?
I think most of them do have like right under or like barely there. So
Yeah.
it's like any little change drops it.
Mhm.
It does. So what would you do in that situation where like we're trying to get them this CalHalf program so they can get assistance, but their credit's so close but not quite there?
So normally, the lender that I would work with would tell them, hey, look, this is what you need to do to get your credit a little higher. That way, when we're in the escrow and all that, their credit is going to be perfect.
Mm-hmm.
Sometimes they have to pay off debt. Sometimes they
Mhm.
have to.
Rapid rescore.
Mm-hmm.
Exactly.
Oh,
Depending
yeah.
on what the lender's saying. Exactly.
But what's great is you have a professional, like a wonderful lender. And our lenders have done this time and time again. And it's always actually really special because when people see their credit score go up and they listen to the guidance of the lender, because we would hate for you to start paying on the student loan, to your point, when really you should have been paying off this little tiny credit card that you
Yeah.
were wondering, well, I only owed $400. Like that actually improved your credit more than,
Right.
a different type of loan.
That's
No.
why sometimes it's better for someone, say you're not ready now, but you want to get ready next year or whatnot, and you're trying to fix your own credit. Sometimes it is better to talk to the lender up front so they can tell you, hey, look, don't worry about this. You should focus on these things. This would really help you, because they have programs that tell them exactly what you need to do
Mhm.
and how it's going to increase your
And
credit.
they
on all of
usually,
them.
you have to do a lot less than you think, but just in the right areas.
Mhm.
And I've actually had people do that. And I go, just talk to a lender. I know you're not ready. They come back, they go, oh my gosh, my credit was way better than I thought.
Yes.
Like some people are very unaware of what they have and they're like, okay, I'm ready to go.
And just as a reminder, the lenders don't look at your credit, the consumer credit, like a car loan does or a credit card loan. It gets ran differently. So you might not know your exact score for buying a home.
Exactly. I actually thought, because it's so true, if you go to Credit Karma, your FICOs and everything else are very different when a lender looks at it.
But I will say I love Credit Karma because it is a very good
I look at it all
indicator.
the time.
Yes, that's how I've always had good credit. And when I met my husband, he did not have any credit at all, and I use it to like track and help guide it. It's very good tips.
It's in like layman terms. And I actually would encourage every single person listening to this, all of you, millions. But we just need to help the one. Credit Karma is the best app. It's actually really neat because they recently are, obviously they have people coming in and rehabbing them all the time. But they now tell me what my home is worth on there, what I owe on my car, what my Kelly Blue Book what my car could sell for. It's really, really neat. So
they have a lot to offer.
credit cards that would be better for you, different ways to shift things, and why your credit is being affected. So you can kind of say, well, my biggest thing would be, okay, well, credit card utilization. Mine is one of the derogatory things is time of credit. Well, when you're younger, you haven't had credit established for 30 years.
Just a quick tip for anybody that has children. You can always add your kids to your credit card so that
As a
when they turn
signer.
18, they have great
good
credit.
I didn't see. We need
You
to have
can
children. I
do
need to
that
have a
through
child to
Credit
learn.
Karma, and you can also go in now. One of their new features, you can go in and dispute things. So if you have something that showed up on your credit report, like one of Haley's medical bills showed up on my credit report and it wasn't mine, so I was able to dispute it and they were able to remove it.
Oh, okay. That's really
So
interesting. That's a really neat fact.
Yeah.
That's so awesome. But you're teaching your
Yes.
kids these early on. I spoke at an Jose Zavalza's event that day, and I was saying I was really blessed to have parents who, my mom was having me during math lessons in school. We were balancing checkbooks for fun.
Said that.
And then we would go in and how to save and how to plan for things. And I think it has made me, I've been a great saver. I've worried about my credit since, I knew what credit was because I was given these tools.
Yeah.
But how many people's parents never talked about a savings account, never talked about
So
credit?
mine didn't.
Mine didn't either.
Yeah.
But it's not too late. And that's where it's great. You could be listening to this and be 43 years old and just not know. It's not too late because
I remember like before, because I didn't have credit when I got out, we had decent jobs, but we didn't have credit. So it's like, yeah, even if you have a good job and no credit, you're not getting anything.
Yeah.
So I remember, I don't know if anyone knows the store La Curacao. It's like kind of like
It's
a
a
Best Buy,
furniture store.
like a Best Buy. Well, they sell like furniture,
Mhm.
electronics,
it
all these
called?
La Curacao.
Okay.
And
Emily still
we're
doesn't know
not
what you said.
sponsored.
yes, we're
Yeah.
not sponsoring it, but so the reason
But we are
why-
sponsoring Credit Karma.
And Invisalign. Sorry.
But the reason I bring it up is because they would give you, it doesn't matter. It's kind of like, you have bad credit, they'll give you whatever you want. They'll give you some credit, right? Give you a credit card.
Mhm.
So you buy things with that credit card that they will give you. Doesn't matter what your credit score is because, you're trying to buy something and build your credit. Well, you're paying the interest on them is like
30%.
way higher. Yeah. Than a normal card would be.
Mhm.
But that's how you build credit, by having debt and having a higher interest. So that's how I started my credit journey.
But you paid it off every month, right?
Oh yeah. Well,
Here's the problem. Do you remember?
I didn't pay that one off every month because I just started. So I would pay the monthly payment to show like the history because I was starting out. So if I would have bought it and paid it right away, it wouldn't really help. They
It
want to
wouldn't
see
record.
that you're
Oh,
yeah.
okay. So you're
So
paying the minimum.
unfortunately, I was paying a lot of interest on it to build my credit. So what I was buying at that time, I had to buy it for more expensive than it was because I was trying to build my credit. And I'm like, I don't want my kids to have to go through that,
So
Mhm.
that's
Buy-
the price
yes.
you had to
I
pay.
had to do that to build my own credit because I wanted to build it faster, you
Mhm.
know? But with my kids, I'm like, no, they're gonna be ready 18 and out, so that way I know I help you
18
with
and
credit.
out? What does
Wow.
that mean? 18 and out.
No,
Sorry, Lucas.
Bye. No. No, but I mean, so that if they want to leave, they can. They're not like, oh, well, I have bad credit. You know, it's like,
Yeah.
now I helped you fix your credit. You take care of your credit. If you don't fix it, keep it up. That's
Yeah.
on you, you know.
When my parents at a young age helped me because they knew I had savings and I did all that stuff and I had a job. They helped co-sign for a car with me, but that helped establish credit for me as well because I was showing my payments that I made. So there's
That's
different
nice.
ways.
So see, you needed them to help you, but if your parents would have added you, you wouldn't have needed their help because you have great credit and you have a job.
Yeah, but at the same time, to go get a car loan at a young age, even if you have credit,
terrifying.
it's going to be a little bit harder. So, but yeah, co-signing with somebody can be scary, especially if they're young. But do you guys remember Capital One, or it's still around, but Capital One credit? They would let anybody qualify.
Oh, yeah.
That was my first
I love
credit
them.
card.
It's everybody's first credit
Let me
card.
tell you
Is
mine
My
too.
second.
How I got this credit card. I was having lunch in college. This was a long time ago when I was in college. Me and my best friend at that time, we were having lunch, and this lady approaches us, and she's like, "Do you guys know what a credit card is?" We had no idea. Fresh out of high school, first semester in college, we had no idea what we were doing. So she approached us. She signed us up for a credit card. We both get this beautiful shiny credit card.
I picture you like clueless when she walks around with
Yes!
purse.
Me and my best
Yeah.
friend went to the mall on a shopping spree because
went-
we had a credit
You
card.
spent all of it.
Yeah, we maxed it out.
Yeah.
It was like
It's like-
$1,000.
I'd say it's probably
I was
$1,500
gonna say,
max.
I usually start at 500 to 1,000.
Yeah, it was like
usually.
$1,000. So we both had to get jobs at KFC right after
Oh.
that because we each
I did
owed
not know this about you.
$1,000. We owed $1,000 in stupid things that we bought, like just like clothes and dumb
So
things.
what was your reaction when you got your bill?
I was like,
Was it
oh,
like Joey
well,
and Friends?
I mean, like we
Yeah.
knew we had to
I'm
pay.
more worried about this KFC thing.
That was like,
Like, did you eat mashed potatoes every day? Because it's like my favorite thing at KFC.
yes.
Okay.
Biscuits.
Oh, I know. I was like, you guys are talking about credit. I'm thinking about fried chicken right now.
Yeah,
Now I'm getting
so
hungry.
good thing that you're doing that for your kids. I had no idea what a credit card was at 18.
I didn't know that either, Rosio. That's really cool. I was just thinking like co-signing, giving opportunities, but that's
See,
really neat.
we have Haley on one of our cards.
You're one of these,
and then
kid.
my in-laws put her on theirs as well,
Oh.
so to help establish her credit.
That's really great because
Yeah.
a lot of people don't know. But had friends, I swear their credit, I didn't even know the worst credit you can have, but that's what they had because they had just lapsed their
credit.
Capital One cards, all of them. They thought, well, I'm not paying it back. And I'm like, okay. They had no idea. I have no idea how they didn't know that would be a problem someday. But even into their in their late 20s, it was a problem for them because
The only thing is that they can fall off, but it's like after 7 or
7
10
years.
years. It
Yeah,
just kind of
depending.
depends.
who wants to wait 7 or 10 years
Unless
for
you do bankruptcy, and
So,
then that's still
The
like
crummy
Oh, you
thing
pay.
is Capital One can hold it for 7 years, and then right before it expires, they sell it to a collection agency, and then it's
It
another
starts
7
back
years.
up again.
not that collection.
Yeah,
Yeah.
so I think I'm so grateful that I was taught otherwise, but we know that people have gone through these things, but it also makes me very compassionate to the fact that not everybody has great credit. People have been through things. Divorce will ruin your credit sometimes if you have like an angry spouse that just wanted to ruin your life for fun like that.
So-
That's not what you want. But 640 is doable.
It is doable.
And we recently had a Zillow caller. She was in the high fives, but she needs the assistance. So she could have qualified for standard FHA to Rosio's point, but she would have had to have more money in reserves and come up with that money. She's not going to get the credit from the lender for that assistance. So we just got her up. It took, I think, 4 or 5 months, which really isn't the worst case, right? Considering all the things. And she's at 680.
Oh,
now.
wow,
that's a really
Yeah.
big jump. That's
See,
great.
And with a good lender too, they'll run a scenario for you and let you know, hey, pay
Yeah.
$200 here, pay your monthly payment here, do these little things, and that will help boost your credit the right way. in this
Exactly.
amount
And
of time.
she did all this with a lender. So she got really excited. She would call me. She's like, I paid off that one collection. And these were collections that she had to do. And that's why I'm compassionate.
Yeah.
It's like, when medical things happen or things like that, like life gets in the way. We can't always stop those things.
But I would still say, like, if you're trying to fix your own credit, even if you do have collections and you're trying to buy a home, still do not pay your collections off before you talk to the lender,
Yes.
because time of the collection makes a difference, as well as the type of the collection, because you might have one that they say, you know what, you don't even have to pay that.
Especially if we need to prove your reserves in the bank. So we
Yes.
want you to keep that money. We are not telling you to pay off everything.
Talk
Also,
to
when
the
you-
lender first.
When you try to pay those things on your own, sometimes they're not even your debt. So you have to double check with your lender. They'll guide you. They'll help you figure all those things out. That's the difference between a lender and a realtor. A lender is going to go over all of the finances. We don't touch on finances too much. Just
Just a
like-
general idea.
I just like to know when I talk to you on the phone and I'm like, hi, Barbara, thank you so much for calling us. We love that you want to see 123 Street. Have you talked to a lender? I haven't yet. That's okay. Then you get to talk to him. Well, I've been at my job for 3 years and blah, blah, blah. And you go, you know what? I know there's these programs. I would love for you to talk to my lender because I think that's probably the direction you might go, but talk to them because there might be something better out there to find out. Maybe they're first responders. They get a program if they're a nurse, if they're going to do like a buy down type of an option, because we didn't know at that time that Barbara's uncle is willing to gift her $15,000 for her new home. There's different things. And that's another thing. You can get gifted money. The lenders will also tell you how to go about that. So if you have a family member who's willing to help you, they don't have to be on title or part of the loan. They can actually gift you those funds.
And depending on what kind of loan program you have is how much they can gift you as well. So some have a limit and some it doesn't matter. It
But
just
that's the thing.
depends.
A lender will be able to guide you in that, which is awesome. And I've had so many times FHA buyers actually really high of getting gifted money because parents do want to help you, but they don't want to be liable for that. Or they have their own, debt to, income ratios and things
also
of
when
those
they
matter.
gift you, when they give you a gift, we don't have to really prove where that money came from, right? Like it could just be a gift.
They do. So it can't be like mattress money, but if it comes from an account, it's not going to be looked at as scrutinized as if you're getting the loan yourself.
So they're only checking that it's coming from another account?
Correct.
They're going to do that, and then they're going to get a letter of explanation.
Okay.
But I recently had that because that lender was very, very young, which I respect. We all start somewhere. He didn't know. So I got involved knowing what I know after all these years. Like, again, we're not specialists, but we do know a lot, right? Having conversations with lenders all the time. And I'm like, take him out of that, go back to his business loan, give the money back, have him re-gift it to the other side of the bank and, write a letter of explanation. He's like, oh yeah. I'm like, okay, let's do that. So it saved it because we do want to talk. Don't have your uncle gift you that money if you haven't talked to the lender yet.
Yeah, and go put it in your account and then you're
Now
going
you
to have to
have to
explain.
What I have a
It's
question.
so fishy.
In that situation, would they have to season it even though they see where it came from or no?
I feel like it depends on the lender because some lenders say that you can just go directly take that gift money to escrow. Nobody's going to ask. Other lenders
Yes.
say it has to be seasoned. So I don't know.
And that's why you don't want to tell your buyer, like, no, you're good. And to find out the lender's like, no, I need that. So it does depend on the lender. We single-handedly try to work with the lenders who are the easiest going, honorable,
More upfront.
And reputable. Honest.
Like, we don't want you to do something that isn't right. And I've actually had lenders say, you're good. I don't need that. And at the end of the loan, they couldn't do it. But this is that buyer coming with that lender. Well, that lender said they give me a way better interest rate, lower fees. And I'm thinking to myself, how? Like, it doesn't even
False
seem possible,
promises.
but I can't force you to use one of my lenders. I'd like for you to explore other lenders.
And again, just a reminder, we don't work for the same company and we do not get a commission from that loan.
Yeah,
Oh,
we don't
no.
get a commission if we work with the particular lender or if we don't get
We actually,
anything.
I feel like my lenders benefit from me more than
Yeah.
I ever benefit from them. I'm advertising them. I'm paying for this. I'm doing all these things. But the reason I pick them is because I want my clients to be happy and have a successful transaction.
Yes.
I think we all do that, right? So, but that's a 640 credit score. The good news, if you have 700 and above, you can have more debts, I guess, different things, or a lower interest rate. So if you have the lower debts plus a higher credit, even with the down payment assistance program, they will work with you on that interest rate, which is fantastic. So I think that was a great program. If you guys don't have a lot of money in the bank, you need that help, you can afford that monthly payment because eventually you do get to refinance, and that happens pretty quickly. So within 6 months to a year after.
I think it depends on the
as
lender
long as you have
too.
20% equity, I think.
Yes.
Yeah,
If
and then
you
you
wanna-
can get your PMI off of your loan, but you can refinance FHA again for a lower interest rate.
Let's talk about PMI.
I was just going to say that PMI is like a mortgage insurance. So when you get a loan, there's always these penalty fees added too, but that mortgage insurance is one of them. That is the benefit of being a VA buyer.
So why do they get that PMI, Megan?
Because they're not putting the 20% down. So it's like
it's property mortgage insurance.
it's skin in the game. So you're pretty much, when you're putting as much money down, that lender knows you've put so much money down, you're less likely to walk away from your 20% down payment.
So I always say, think of it like a gap insurance, like when you buy a car, because you're paying a payment on your car. So the lender is not certain, if you're going to be paying these payments. So you get gap insurance. So in case something happens, whatever excess that insurance doesn't pay, if you get an accident, then that covers you. So it's similar with that, with the home.
And so now if you refinance because you have 20% equity, that lender knows that they now own the home, because technically the lenders own the home. That they said, okay, this home has value now. I'm feeling more comfortable with removing that insurance. So that is beneficial. So a VA buyer doesn't have that, but we are grateful. They served our country. They deserve not to have penalties. And a lot of times the VA buyers are always going to be getting income because they were military in certain aspects.
And just as a reminder, VA does not require any down payment, come in at zero.
Yeah, it's 100%.
But they also
financing.
still have closing costs.
But they're a lot less
They're a
too.
lot less,
Sometimes
and you have the non-allowables too.
Let's talk a lot about that because I have a buyer.
you have a VA buyer?
Well, one of my neighbors. You know
Hi.
who you are.
Call her. No, because the VA loans, they've always been one of my favorite loans because I'm so passionate about the military, love helping them. And a lot of times this is a military town. So sometimes military loans, we have to just clear the air on it. Most agents don't love them because they're more strict. The appraisals are they can come in a little bit lower sometimes because they have a lot different guidelines.
As well as the
FHA?
requirements of like the home itself. So like FHA, they have their requirements. There can't be a hole in the wall type of thing.
Chipped paint, things like
VA
that.
is a little stricter than FHA, but they kind of fall, in the same guidelines.
Like
Which
if you-
is great for the buyer, right?
Exactly.
Because the buyer is being protected.
Oh, it's amazing.
Correct.
And if I have a listing that is pristine, I'm not worried about VA. If I show a VA client a home that is missing a stove, you have to have a stove, or there's not smoke detectors in it. There is
AC has to be in working
unfinished
condition.
construction, certain things like that. The problem is we cannot close that loan until they are fixed by the appraiser. That means even if you said I'm buying it as is, you cannot, because they will not go through with the loan, which sellers can. At that point, they've accepted our loan, but that doesn't mean they have to do those things. It can sour a deal. So we try to look at those things up front. So getting VAs, sometimes people don't love them, and agents might talk their sellers out of accepting VA because of that, knowing the house might not be in, the quality it needs to be at.
Okay.
But otherwise, a lot of times in this town, there's a lot of military owners that will choose a VA offer over anything else because they like to help the military as well. So I've had that happen many, many times. And they go, we'd really like to go with that family, and we're grateful for their service. And I go, that is your choice. You could choose whoever you want. And inside I'm like, yeah, we should. I'm really excited.
Touching on the VA qualifications, as a listing agent, the good thing, if you know that the home doesn't qualify for VA and FHA, put that in the MLS. That way people look at it, they know, they don't waste their time.
And that would be a situation.
Again, we hope that the agent does her job,
Yeah.
but sweet Lord.
It also would be like you talking to your client. So if the seller's saying, I'm not doing any type of repairs, then obviously you probably want to market, like if it's, it needs repairs, then obviously market that it's not going to be FHA or VA, because if he's not going to do any repairs, then it won't qualify.
And that's where we can't rely on the lender, because the lender doesn't come to the showings with us. So when the lender gets this and they go, Megan, it needed a new side door. The door didn't shut to the garage from the laundry room. It didn't have smoke detectors. It's like, I feel like a failure because I didn't check those things. Like, we need to do our job on that and protect these buyers. But for the VA, you don't have to have a down payment. It is amazing. You don't have the PMI insurance, again, helping that. They have the better rates. You can still get those closing costs. So sometimes military people, they actually can afford conventional financing. They have reserves because they've never had to put the money down year after or time after time.
And just as a reminder, because I have had this situation before, just because it is a VA loan and you don't have zero, you have zero down coming in, that does not mean that you
They're
don't.
not responsible for closing.
Yes, but no. I'm saying your EMD, which is your earnest money or good faith deposit, you are still required to give a good faith deposit so that the seller wants to accept your offer. I've had it where a client's a VA buyer, they're like, well, we don't want to give that. Why would we need to give it if we have zero down? Yes, you have zero down. But if you want your offer accepted, you won't need to give a little so they can see you're a serious buyer. Because at this point, the seller's like, well, you haven't put in anything. Why would I accept it if you decide?
They call it skin in the game. You know, it's like they're going to hold a credit card for you at a hotel. You're going to tell them, well, I served the country. I'm not letting you do that. No, like people have requirements. That is a requirement. You do have to put a deposit in.
And you'll get it back at the close of escrow.
As long as
So if you're truly doing zero down and you had to give that $5,000 deposit as a holding, you just get that check written right back to you. Nobody's going to keep it. I'll finish my thought real fast on the other thing. Was if you have your closing costs covered and you can afford all that, and we can still ask the seller for some closing costs, we can use that now for your rate buy down. So VAs have a lot of different options because their rates are better, but we could still buy down your rate. So your payment can be, it could way lower.
And just to touch back on the CalHFA one, if your credit and your interest on those is it what it is, you can't buy those down.
Yeah.
So that's a good thing on the VA when you're able to buy it down.
Yeah.
So there's a lot of great benefits with the VA loan.
Oh, it's amazing. I love VA loans. They also are kind of a slam dunk deal. These people are, they are very rare to have a VA fall apart. The good news too is for the VA buyer, not the seller, it's almost nearly impossible to lose your deposit as a VA buyer. So if you're worried about your EMD sitting in there, even if it had to get held up because people are trying to fight over it, it's very rare that a military family would ever lose their deposit, especially in the state of California. From what I've seen, it is good luck. And I tell my sellers that up front because they're like, what about their deposit? I'm like, they're VA. You're not going to ever get this back. The judge is not going to rule in your favor to take their money.
Yeah.
One of my neighbor's questions was, can I use it again in the future if I want to purchase another home?
I think you could refinance yourself out of that one.
It has to be your primary
It has
home.
to be your primary owner occupied.
Yeah, you can go buy an investment
Not an
property.
investment.
And then if you own, there's different things too. So people try to buy investment properties. I think there's also like a mileage gap. So if you're like, well, this is my primary, they're trying to finagle one over because they want to buy one for their kids nearby, but they don't want to put 20% down as an investment property. The lenders look where you own homes, and it can't be within like a 50-mile radius or something like that.
It can't even be Palmdale to Santa Clarita.
It can be if it's 50 miles. If there's
Okay.
But that's not.
Yeah, Santa Clarita is not 50 miles. It's like 30.
No, it's like 30.
What if you're on a mountain and 10 miles up? No.
Does
I guess that's
elevation
true.
count?
Yeah, because I actually had that happen on one because they were trying to finagle it and they were lying about all these things, and they got caught because their home was in that radius. Kind of made me mad at that lender because I'm like, you should have checked that freaking up front.
So you're saying they can't buy it if they have a home?
Oh, they can buy it, but they're coming in with that cash down.
How are
No, I
they
see
having
what
their
you're saying.
primary residence and the house next door is also
A
their
secondary
primary?
home. Yeah,
They're
exactly.
going to combine them. I just saw that on $1 Million Listing Los Angeles.
So pretty much,
I never watched those.
as long as they finance the primary home out and then go to the other one in a VA and move to the next home.
Yes. So there's a lot of things. I just had one where they were talking about somebody could assume your VA loan.
Is that a thing?
It is a thing. So I actually can go assume somebody's VA loan. How amazing is that?
Can you touch
Even
on
if
what
you're not a
assume their
VA?
loan means?
Yes. So assuming their loan is I'm taking over your loan, I qualify
At your interest.
at their interest that they have.
Mhm.
So I'm going to qualify for that 2.37% interest rate, which is amazing. Who wouldn't want that? But now that seller has lost their VA eligibility until I decide to sell that home or pay it off.
Oh.
But I'm thinking to myself, and my seller was like, well, I could do that because we could probably get more for the house. And I'm like, let's look at this long term. You getting that VA loan in the future for yourself, who cares if you got 30 grand more right now because they assumed your loan. And also, what if they ever default on that? There's a lot of different things. So these assumable loans, it is very, very, very risky. I don't encourage it.
So it stays under them still? When they assume it, it doesn't like.
There's $100,000 penalty if they ever were to default. The good news is, so if I were to assume, saying you're selling your house for $500, you only owe $300,000. I'm going to assume the loan, but I need to come in with that $200,000 in cash.
That was my question.
Okay.
What I told my client, I said, the good news is in this case, they were coming in with over 400,000 cash.
I know who you're.
So I said, them defaulting is slim to none because nobody's going to walk away from their $400,000 in equity, but they might live here for 30 years. You're going to be 80 years old. And now you never got to, they didn't serve our country. Not saying they don't deserve it, but you worked for your VA. You did those things.
He's
Why are you
basically
giving it?
losing his right of using a VA loan in the future
Until it's paid off,
Exactly.
right?
Exactly.
Until
So
it's paid off or refinanced.
why would they ever refi at a 2.37%
Yeah,
interest rate?
But the question was like he can't use it
No.
until it's either refinanced out or paid off.
Yes. I think pretty much like sold. Yeah, they got rid of that loan, however
Okay.
capacity they did that, or the home is paid off, which I mean,
Got it.
so risky, so risky. But we always look into these things because you never know. For our last loan, unless
We're gonna touch on the USDA one a little bit and more about what the requirements are on that one. We haven't.
I feel like we did a lot of that. That's zero down. You have to find the
What's
home.
your credit?
On that one,
640.
640 as well.
And you have a PMI on that as well, huh?
Yes.
Right?
So
Yeah.
there's still going to be like, you're not putting any skin in the game.
Right.
There's definitely going to be something like that, but
Some
the
people-
payments are more affordable.
Get confused too, thinking, oh, I'm doing a conventional, even though it's 5% down. I'm not going to have PMI. You're not going to have PMI, but you're still going to have MIP. It's the exact same thing.
Yeah.
So that's something to.
What's the difference between PMI and MIP?
It's based on the type of loan. MIP is a mortgage insurance premium, whereas PMI is your private mortgage insurance. So it depends on the loan. It's the exact same.
But again, you're not having some type of add-on fees. I
Right.
was going to say conventional just means you put 20% down. It's the best loan. Sometimes.
Well, there
But now-
can be 3% conventional as well as
Oh, yeah, that's true.
5%.
There's 3, 5 now.
3, 5, 10, 15.
Yes.
Yeah.
I know that. But when you talk to a lender and you're doing 3% conventional, the rate's way better on FHA. They're never going to
Yes.
tell you.
Yes.
If you're like, well, I want to do 5% conventional, I'm like, cool. Like your payment's actually higher and
Yeah.
worse than the FHA offers right now.
Mhm.
So it depends on the market. But yes, you don't have to put all the way up to 20% down, but your rate will not make as much sense. I would still do the FHA if you can afford the payment. And you can still put more than the 3.5% down, even on a FHA. You don't have to just
Mhm.
do the 3.5. But I wanted to talk about mobile home loans because I feel like they're really popular right now. You guys are way well versed in the mobile home world because you've had, how many have you done this year? Like 7? I feel like it's been so many.
I feel like it's
I've
a
done
lot.
one.
You've done so many.
Well,
You
and-
just
and
did
the new
one.
listing.
All together, there's so many mobile home loans.
Yes.
But they're a lot more tricky. So I just want to touch on that because if people are thinking that because homes are getting really expensive, people are looking into other options.
Yes.
Mobile home parks are really great. People like want to, not talk about it or say we're there. Boulders is fantastic.
Yeah.
So, but if you want to go get a loan, they're not just standard lenders. So
Correct. And a lot of the times, like regular, standard lenders will say, oh, yeah, we can do mobile home, but it can only be on its own property and it has to have the right filing of 433A
Mhm.
that is saying that it is going to stay there. It's not moved. It's on a fixed foundation.
mhm.
But a lot of the times when someone's trying to buy a mobile home, they're like, oh, yeah, I am pre-approved, but it's for residential FHA type 1. And
Yeah.
It's for a
these-
modular home, not a mobile home.
And you have to have, I think from what I understood before, it's actually people think, well, I'm pre-approved residentially. I'm going to go the mobile home world, but they're doing down payment assistance program. They have no money.
And
You're not getting a mobile home.
unfortunately-
Mobile homes are
No.
actually, you have to have way more money to buy a mobile home
Yeah.
essentially.
Stricter guidelines.
Mhm. Way
So,
stricter.
Yes, unfortunately for the mobile home loans, there's no down payment assistance. There's no first time home buyer program. You're just pretty much buying at conventional type, and that's it.
But the benefits are lower cost homes
Mhm.
and
But
more-
higher interest rates.
correct because the mobile home loans are usually twice what a residential loan is.
I didn't know that.
Yeah.
they're very expensive, but the truth is, and just being bold with it, mobile homes are not good investments. I've never sold a mobile home and said, wow, you quadrupled your whatever. I think
It's
for this
better-
lady, yes, because she bought 100 years ago, but she's also lived there that many years and this is all the equity she has?
So I think right now what I'm noticing is a lot of people on a fixed income are buying those. It's kind of like
Mhm.
my dad.
Mhm.
He bought his and all he pays on his space rent is like $500 plus his utilities.
And does that cover his water as well, right? Or
No,
no?
so unfortunately, most of the time it does not cover water. It usually only covers sewer. Of course, every park is different
Mhm.
and the space rent cost is different. So right
Mhm.
now, that's what I've been seeing. Most people are trying to buy mobile homes and buy them out cash. So that way their space rent is all they're paying. And
Yeah.
because they're on a fixed income, it works for them. So yeah, they might not
Yeah.
be building their equity, but they're also not going to have, the increase in anything really.
What about property tax? Do you know anything about mobile
There-
home property tax?
So there's two different ways you do it. There's either kind of like a registration. So they're paying like 120 for the year or something like that.
Isn't
It's
that
in
to
lieu of tax.
DMV?
It's not to the DMV. It's the HCD office.
Okay.
So it's similar to the DMV,
Mhm.
but you can also change it to a regular tax one. But why would you do that? You're going to pay a lot more in taxes.
Well, that's like where the savings is, because even if you were to pay off your home and your
Mhm.
property taxes are, really high. I mean, property taxes are so high that you're still paying on that forever, plus home
Exactly.
insurance, plus all that.
Mhm.
So even with a home that's paid off, you still could be paying $1,000+ a month.
And then the other thing too is what I usually tell my clients is that buying a mobile home and the mobile home loan is similar to buying a car, because the car loan world, the better your credit, the less down you have to give.
Mhm.
Similar to with mobile homes, the better the credit, less down you have to give, and it usually ranges between 5 to 20%. The better the credit, probably 5% down, right? And it
Mhm.
also depends on your debt to income. So if you have higher debt, they're gonna ask for a little more down payment. But I've seen it to where they do ask for up to like 50% down or 33% down. It just depends on
Yeah.
what your debt is.
And that's why I've actually talked some people out of a mobile home more times than I put them in, because standard single family residents are going to be your better asset. I feel like there's a lot more protection in them. You're going to gain more equity. And getting park approval too is hard. You're putting more money down. I like mobile homes. I think they're great for fixed income, but I also think if you can afford and put that much money down, I'd love to have you go into the residential world first.
And sometimes when you compare the payments from a mobile home loan plus space and you compare it to a mortgage, it's not almost the same, but
Mhm.
it's only a little bit of a difference that most people are like, well, I'd rather go with a mortgage loan. than a
Absolutely.
mobile
And that's
home.
why I tell people to look into it. What is the best case for a mobile home?
Yes.
Cash buyers.
Cash buyers.
If
exactly.
you are, and we have a client that's doing that, they have so much equity, they're going to go buy a mobile home cash. That is incredible. They got rid of their mortgage, they use their equity, and now they're just with the space rent and they don't have those high property taxes because they are on a fixed income.
Another
Yeah.
thing I think buyers need to understand is even in buying a mobile home, you have to give an earnest money deposit. And then your park will sometimes require a deposit as well.
Not necessarily deposit, but well, yes, sometimes they
Our
do.
one in Riverside
but
did, yeah.
to start, you even have to pay an application to run their
Mhm.
credit. So
You have to pay the
yes.
application. The one, was it Ridgecrest, Riverside? One
Yes.
of those are cities.
Yeah.
They had a $1,200 deposit that they had to
Oh, wow.
give to their
And what was the
Park.
space rent in that park?
$680.
So double.
Mhm.
Wow.
Yeah. This is weird. I was talking to one of my clients last night. Do lenders charge to run your credit if you're going to apply for a
So
loan?
now
some
they
do.
do. Well, they don't charge you, but now they do have to pay $150, I believe. Before it was, I think they only had to pay like $20 or $30.
Is it still included in closing costs?
That's a good question. I don't know.
But is that upfront? You're like, hey, I think I want to try to get pre-approved. Do you have to pay that $50, $100?
So that I'm aware of, no, but I've never seen it where they usually they charge it on the statements, but I don't know if the lenders are actually letting the client know,
No.
hey, this is part of the process. And that's why working with a good lender is the key, because they're going to tell them up front. They know that these are expenses that they're charging them. So
But you mean wrapped into your closing costs?
yeah, so most of the time.
But
it's on
have
the
you
loan.
had one, they were shopping around lenders, they charged for the credit run?
Like they make you give a credit card up front?
No, they charged her for her credit report. I thought that was weird. I haven't heard that. And I thought, am
heard
I?
that at the beginning of the year, I had somebody that was getting pre-approved for a mobile home loan, and then they tried to do a mortgage loan. So they were kind of going back and forth. and the lender told me that they were gonna they were having to start to pay $150. So they're like, we don't want to just run people's credits.
I think it's because they probably
I do not
see-
like that for
You
some
don't want to
reason.
know why? It's not so bad. Think about it. If they're running their credit and they're not being charged, anybody's going to say, I'm going to go get this loan just because I want to find out or just talk to them just to find out. Now you have all these lenders working and working and working on this file
Yeah.
because everybody's saying, oh, well, I want to try. But then they don't actually buy.
You mean it's
Now-
less likely they're going to shop around 5 lenders?
Just the same
Or
way.
not just necessarily shop around, but just in general. You know they're more serious. Think about it.
Yeah.
Now I have to give them money to run. There you
Yeah.
go. Thank you.
Just like us realtors want a pre-approval before we go show homes, I think lenders are also starting to say, well, I need a little bit of commitment from your end to know that you're really serious about this, because I'm going to have to put those $150 out of my pocket.
I just thought it was weird because this client, I have worked with her for so long and I've tried to bring her into the perfect lender because these programs keep changing. We're trying to see what fits best. Only one lender out of all of those charged her for the credit report. But it made me not want to use that lender because I thought, man, these other lenders were kind enough to help her because money is so tight for her. But I do agree. Well, at the end of the day, that guy worked for nothing now too. So I do understand.
Also, that lender that charged, maybe that's a new lender that doesn't have the funds to be putting those,
I think so. So in other words, like it's almost like some coffee shops charge you to use your credit
Or
card.
it could be that he doesn't know how to work it to tie it into the loan
Yeah.
or
Yeah.
different reasons.
But I do know that now it is more expensive to run your credit.
Yeah, no, I'm learning because I feel like things are changing and we have to be
Experian
talking to
charges
these
you,
lenders.
like what? What do they charge you?
$25 or $75.
I was
going
gonna
to
say 75, but I wasn't
75
sure.
if you want all 3 bureaus.
Unless you want to do a free trial and then they charge you like $10 or something. I don't
Yeah,
know.
but then you only get the one bureau.
one?
Yeah, if you want to do
But
it.
why would you be doing that? Why would you pay
Running
that
it?
money? Yeah.
Yeah.
Oh, I
Credit
see what
card
you're
is
saying,
free.
like, why would you do it? No, I'm just
Yeah, no, that's what I'm saying. What would be?
I was giving an example. So, like, if these companies are charging us, the consumer, this price, then obviously that's kind of why the
The
lender's
lender's passing
charging
along
whatever
the charge.
charge.
No, no, totally makes sense. I just was like, heard that last night and I didn't want to say anything, but I was like, oh, that's weird. Because
We should ask all our lenders and find out. That way we can tell our clients, because I'd actually like to know if they're going to have them pay up front or not, because
Yeah.
that's also an additional cost that I didn't.
well,
Tell them.
also
I know
it kind of throws people off because you're like, hey, just go get qualified. And then to get people to
They
spend
gotta pay.
$50 is kind of hard. $150?
Yeah.
No.
Also, now, what if lenders are now just maybe not checking their credit because they don't want to pay the $150 and they kind of just give you a pre-approval going based on whatever
What
the
you-
buyer said? Oh, my credit scored at 700. Okay, here's your pre-approval of 700.
Well, that's why you ask for the DU. That way they ran everything.
Underwriting approval is not as common as you think. So a lot of times they say there's a difference between pre-qual and pre-approval. Pre-qual, it's like, yeah, it looks good. Pre-approval, they have your information, they have your bank statements, all of those things. Underwriting approval, which Rosie was talking about, is DU approval.
It was actually submitted to
Yeah.
The underwriter
underwriting.
looked at that and said, I don't foresee these issues other than we will need, verification of employment, updated bank statements as we go through, blah, blah, blah. As a listing agent, if you come in and you say, I have DU approval, your offer just got moved to numero uno.
Yeah.
Sooner
Yes.
as well, because they already ran up things up front.
Absolutely.
They're like 2 weeks ahead of the game.
So if I
already.
have just a pre-qual lender that calls me from Rocket Mortgage, because they're always from frickin' Rocket
Yeah.
Mortgage, and they say, hey, they're pre-qualified, we want to do a 21-day close. I tell my client, I'm like, they're already lying
Yeah.
because they're not going to do that, because just to even get certain things done in that time frame, we know it's not going to happen. So we try to go
Is
through
Rocket Mortgage capable of closing anything in 21 days?
21 years. I swear. Sometimes it depends on how great. There's slam dunk buyers out there. There are like people like my parents who are like, we have perfect credit. We have saved. We have all of our, because they're old school, right? They just go through these things. They're going to close as fast as possible. But that is not the standard buyer. And we know that nowadays, my dad worked for the same company for 39 years. People have had multiple jobs. They're collecting things. They're going back. They're
People have like 5 side hustles.
Yeah.
more
3
than one
business,
car.
Yeah.
Remember back in the day, the houses had 1-car garage. And you're like, why would they build a house with 1-car garage? Because women stayed home and only the husband went to work. They had 1 car. Like
That's true.
things have changed. Life is
As I roll
progressing.
my eyes on
Yeah.
Now we need 4-car garage, RV access.
With a
Yes.
pool.
The wife has 2 cars
Pool.
now.
Well, Lindsay just said 10 over there, so.
Yeah, we got some car collectors in here, but it is interesting because my grandma, and what a blessing for me, she's 90 years old, or going to be 90 in May 2nd, which is coming up. So really exciting.
Happy birthday to her.
I know, I'm so excited. But we talk about things, and listening to her knowledge of how things have progressed, and one of her jobs, she worked at a copy shop, which
That's cute.
Like copy? Like
Yeah,
making
copy.
copies. But like
Like a
those
FedEx
were
nowadays.
those were jobs, and those were little things to get her out of the house because my grandpa worked, and she would wait to get home, or he'd drop her off. Like we live in such a different,
I
fast-paced
know.
world.
I really
and
wish we could live in those days.
you know what she feels sad for today's society.
Too.
Oh no, but everybody looks so nice. You know, but like when she goes to church, she looks beautiful. Like I went to church on
She's
Sunday.
probably like, why isn't
people are wearing,
everybody
like,
dressing up?
Oh, she feels like, did they just roll out of bed? And I'm like, I think they did, but which is fine. Society has changed, but it's really interesting to listen to those things and kind of how much, back in the day with people, when we're looking at these credit debt ratios, Americans now need so much more. That's what, we want you to talk to a lender. We want you to figure your finances out and get you a home with a 2-car garage at least.
We really are in the century of more.
Oh,
Everybody wants more. They want more. They have
Instant
everything and they want
gratification.
instant
more.
gratification. My favorite things are when we do get these qualifications. It's okay. What do you want in a house? I want to know so I could help you find your dream home. And at first they're like, just a 3-2. Now all of a sudden it's like with a pool, with a fountain, with this, solar paid off, and so people's requirements do get higher and higher.
3-car tandem garage, so I can have a gym in the front end.
Yeah, exactly. So we try to do it all, but I think we covered a lot. There's going to be we will always, as new loans come out, we will pitch them. We didn't pitch one today because I don't like it.
The dreamer one, or what's it called? The dream.
It should be a dreamer one because they just take your equity. Moral of the story, you're going to pay off this house, and then when you are excited that you made $300,000 in equity, they're taking
You have to pay
most
it
of
back.
that. Mm-mm.
Oh yeah, educate me on that one after we're done.
Yeah.
Yeah, or don't. Yeah, because it's terrible. But I will tell you about it. But until next time on episode 6, we will see you there. Thanks for listening.
Bye.
Bye.